To answer your question, you can terminate your securities on loan at Fidelity anytime, either by selling the shares that are being lent out or by canceling your enrollment and having your shares returned. Now, many of you may have been wondering, why are we not lending out our AMC shares? Of course, because of the negative effects, but they're offering such a great amount of return. In fact, this was back 6 months ago. They were offering you basically a return of 29% on your AMC shares, 9 on your GameStop, 8 on your COS, and 4 on your Bed Bath & Beyond. Cumulatively, you could have been making almost 50% returns by doing absolutely nothing. So why aren't we lending our AMC shares? Not to mention that this was back 6 months ago, and it's probably a lot higher. Are you lending your shares? Are you making a decent amount of money? And why shouldn't you lend your shares? What is going on, guys? Sachs here. Welcome back to the channel. Welcome to the channel if you're new. First of all, hopefully you guys all enjoyed your weekend. I want to talk about some stuff in this video. Of course, first we're going over share lending and the very dangerous risk to lend out your shares, pros and cons to doing both. Without further ado, if you find value out of the video or enjoy watching, make sure to hit the like button because stuff is happening with banks that we're going to get into right after we touch on some AMC stuff, as well as AMC's support level being right around $100. We're going to talk about that in a minute as well. Now, several different brokers, several different platforms do it different. The one I pulled is just from Fidelity, where they say, listen, you can get those shares back at any time. As long as you lend them out, you're going to be okay. However, other platforms are borrowing your shares without asking you, turning on share lending without asking you, and so many of them just do it a different way. In fact, here is the list of almost every single broker and how they do this. I'm going to leave it linked in the comments under the Moomoo and Discord link so you guys can check it out in case you want to see how your brokers engage in share lending. But what is the downside of stock lending? Potential borrower default. Perhaps the biggest risk, though, is in the instance where the institution borrowing your shares defaults and can't give the shares back to you. Are there any negatives to stock lending? The main risks are that the borrower becomes insolvent and or the value of the collateral provided falls below the cost of replacing the securities that have been lent. In other words, when someone borrows your securities, they throw something up as collateral. Whether it be bonds or something else, they throw something up as collateral, and whatever they do put up as collateral, if that starts to be undervalued more than the shares, right? So less than the shares. In other words, they can't pay you back the equal amount and return the shares. This is where it gets to be a problem. Now, the one thing I wanted to note is a potential borrower default is almost 100% guaranteed. Not financial advice, I'm not a financial advisor, but if there's any stock that's guaranteed with, it's AMC and GameStop, right? These are going to make every single institution and fund bankrupt, completely insolvent. And guess what happens there? If your shares are lent out, you don't get to sell them during the squeeze. You're not getting those shares back because they went insolvent, and now those shares belong back to that broker. There's a big danger in this. And just to break it down quickly so we can move on, here's the gist. Lending your stock has a risk of the borrower defaulting or becoming insolvent, in which case with AMC and GameStop, it's basically inevitable, at least should be, but we know the game's rigged. So the bet here is that A, you lend your shares and get paid almost like a dividend, but the share price of the security likely falls, thus more than likely making you net negative, which is still unrealized. If they're borrowing your stock, you're adding more selling pressure, thus delaying the squeeze, thus bringing the price of the security down anyway. So you're getting that dividend, but it's almost buying into a company that produces a dividend. However, it is on a long track record of just falling. You're basically guaranteed to lose money based on the growth side of things, but get a little bit of a paycheck every now and then. Or B, you turn off lending, don't collect anything, but have no risk on upside rips and or short squeezes. Plus, you're preventing additional selling pressure on the security. In this case, AMC, it's probably most risky to lend, which reflects the insane payout of lending. Everything is 50-50 on risk, especially if AMC even were to just open at insane value instead of slowly scaling up. And what I mean by this is everything is 50-50 risk. So the only reason that you're getting paid such a good amount to lend those shares is because you have an insane amount of risk by lending out those shares. Everything is 50-50. It's never sunshine and rainbows. You're never just going to get a fat check for absolutely nothing. Now, as all of this may be true and all, remember that a lot of shorts don't have to pay that high cost borrow fee. They just naked short and rehypothecate. It all comes down to still a question that we have. Do you pay cost of borrows on naked shorts? Do you return naked shorts? If so, how, why, or when? Moving on with the video, this was an article published by the Coin Republic, and they go over the technical analysis on AMC. I'm not going to spend a lot of time on it. However, they push out sort of a negative sentiment that AMC is declining, but I don't know if this is some sort of bait for apes to eat up, or this was not supposed to be released yet, or what it was, but technical levels state the support is at $99.40 and the resistance is at $105.86. So is AMC currently trading at $100, or is AMC going to open at $100 very, very soon? You guys let me know what you think about this in the comments down below. Plus, Judge Zern calendar is open this upcoming Friday. Only time will tell. In other words, we have a chance for Judge Zern to come out and say, all right, I'm going to use this day where my calendar is open to basically clear up the AMC lawsuit, AMC settlement, and reach a verdict here. Moving on, SBI Holding confirms over 47 Japanese banks to use XRP for all payment services, and we know XRP is tied with AMC and how the chart moves, so that is very exciting. In fact, every bank in Japan will use Ripple's XRP by 2025, says SBI CEO. Can it drive the price to $5? You guys let me know in the comments down below. Are you holding XRP? Do you think it could make it to $5? And do you believe in the correlation over to AMC's chart? Now, before we move on with what's happening with banks and you really want to stay for this, get your 16 free stocks. Guys, it's free. All you have to do is use my link, sign up for Moomoo, and make a deposit. It takes 2 minutes out of your day. Once you press the link, you can scroll down and see the deposit criteria to see what benefits you can get. You're getting $100 cash back to you from Moomoo, courtesy of Moomoo, plus a potential free Tesla or a Google stock, and up to 16 free stocks, each valued up to $2 grand. So make sure to use my link. Go do that. Also, guys, pop in the Discord. The link is right under the video. I'm in there on the daily, so if you want to talk with me on the daily and 500 of the most amazing people, get in the Discord. We also have options trading alerts and talk stocks all day long. Let's get back to the video. Bank of America closing accounts due to Bitcoin transactions with Coinbase. Finally, $200 billion exits JP Morgan Chase in 1 year as customers withdraw cash amid U.S. banking concerns. Now, this is just in the last year as the bank deals with a long list of fines, losses, and scandals. JP Morgan's latest earnings presentation for Q2 this year shows that excluding deposits from First Republic Bank, which the bank acquired last year, deposits were down year on year $2.3 trillion compared to 2.5. Now, whatever the reason you want to say for it is, the banking crisis is still going on. The media is just not pushing it out as much because they don't want to make a big deal out of it. They want to avoid that fear tactic right now as banks are actually in trouble. But speaking of banks, we have earnings this week, and it's a major earnings week. We have a ton of banks releasing earnings. First Republic, Bank of America, Charles Schwab, Morgan Stanley. We also have Interactive Brokers, Goldman Sachs, M&T Bank, Citizens. We go down the list. It's a bank earnings week, and it's going to affect the stock market. And it's also going to affect me and us in Discord because we're probably going to be playing puts on some of these plays. Now, to close out the video, 3 things to watch on Wall Street this week. Earnings season gathers momentum. Of course, watch the earnings season. Tesla, Netflix report results, and US retail sales. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button, hit the subscribe button on your way out, and share the video with your grandma, aunt, uncle, dad, whatever it is. I love you all. Lottery Socks out.